Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for December 10th, 2023. For those that are new to my channel, please hit the subscribe button. If you hit the alarm, you'll get notice when I post these. I do this more as a hobby and for the interest in teaching than to sell something, and that gives me the luxury of doing this when it works for me and not sticking to a tight schedule, so the alarm will help you. Email, as you can see, is hgsidoc@gmail.com, and I'm always more than happy to respond to comments and questions, preferably constructive ones, whether via email or in the remarks section. If you like this, please hit the up thumb on YouTube. I titled today, Will Fed Disappointment Slay the Bull? I think it's a good question, although we have more than just the Fed this coming week, which we'll talk about. I'm doing this at the American Society of Hematology meeting, aka Bloodsuckers, aka ASH meeting in San Diego. Could see some volatility in biotech stocks at the beginning of the week, as there's been a lot of news that might impact that industry at this meeting. As always, it's for educational purposes only. Anything I talk about should be considered education and not investment advice. I am a doctor, not a broker. I am independent. No one pays me to say good or bad things about their tools, and trading involves risk, and you are solely responsible for any decisions you make. I will like to call out that we got a Wealth 365 event coming up. I'll include the link in the YouTube remarks section. Please consider signing up and sign up under my name. No, I get nothing if you do that, but Rob Hoffman, who's a proprietor, is nice enough to let me speak there, even though I don't really have a site or list. I do have some tools that are part of the program and an additional thing called the Marketplace Package, which is a paid add-on. This week was kind of flat compared to the last couple. In fact, I think many people thought this week was going to be negative until we got to Friday. If you look at, in yellow, the major indices, you could see small numbers. The only thing that is negative was the NYSE, and you can see it even turned around, had a green 0.40, so it would have been minus 0.7 after Thursday. The Russell was up on the day and for the week, so much of the positivity or lack of negativity in the market this week was because of a strong market on Friday. You can see the dollar was up on the week, and that's never good for stocks. Historically, commodities were relatively weak, minus 2.8. Bonds were up, and we'll talk about rates as we go. If we look here at the sector ETFs, you could see they were mixed on the week, led by consumer discretionary, communications, think Google as well. When I look at the Q Edge tool, it tells me a lot. It tells me on Friday that 9 of the sectors in the S&P 1500 were positive. The only laggards on Friday were utilities and staples. So if this market was in this time that it was going to roll over, you'd expect those defensive type plays to not be negative. The other thing that I see here is, you can see up here, sectors 82% were up on Friday, 63% of industry, 63% of stocks, so a bullish setting mildly. And if you look at 5 days, 10 days, or in a month, you could see a predominance of green. So we really have been in a sweet spot of the year. We know that November is a nice month from a seasonality perspective. It didn't let us down. And December is typically a positive month as well. If we look at the Nick Drendel workbook, just to see what happened on Friday, sort of a heads-up display that I like to have on one of my monitors, you could see that the indices were positive here. ARC was actually the leader, IWO, large or small cap growth, also up. You could see most things finished in the upper half of the range. That's bullish. You could see that all of these are above not only their 50, but also above their 200. That's pretty good. If you look down here and you look at 52-week new highs and new lows, they're both in the green. That's pretty good. And if you look at performance, you could see led by leisure, oil, gas exploration, home builders, energy, semiconductors, and laggards, gold mines, solar, and then biotech, which on the week was up nearly 2%, sold off on Friday. Some of that was, I think, reaction, buy on the rumor, sell on the news, related to the 2 approvals in sickle cell anemia. As a physician whose specialty is hematology and oncology, blood and cancer, and who had the opportunity to care for many patients with sickle cell anemia, the fact that we'll be able to use gene therapy to change a very debilitating and horrible disease and prevent the problems that happen as these kids grow through adolescence and potentially give them a normal life is incredibly exciting. The fact that it's going to cost $2 or $3 million per patient is a little scary. It'll be interesting to see how we handle that as a society. Rates on the left, the 10-year you could see actually picked up on the week and was up 0.19 or less than 0.5%. The 30-year was down on the week, down 0.93 or 2%. So I called it mixed, and I think there's probably some back and forth positioning before the Fed meeting. Recession in our near future, just as I said last week. Yes, the 10-2, the 10-3 are showing yield curve inversions, and we get recessions each time this gray band when we cross back over the zero line. So yeah, there's going to be a recession, but when you look at credit tightness here, or you look at economic activity, neither show that that's imminent. So, I mean, it's hard for me to believe we're going to see a recession in a presidential election year. You would think that those in power, since most people in the House will have their have to go up for re-election, the president will be up for re-election. So you would think there'll be pressure on the Fed. However, after the president is elected, God only knows what's going to happen, and I do think we'll get a recession. Just a prediction, not necessarily reality. Breath eases as the markets digest recent gains. Whether you look at the stocks above the 200-day, stocks above the 40-day, the T21-21 13-week new high, new low, all turn lower on Friday or on the week. Now, this one continues to be a great sign of when the market is getting extended, but you can just see rotation and sideways movement. We certainly saw that for most of the week. The buckets, this tells me that 81% of the stocks in the S&P 1500 were above the midline of their Bollinger Bands. Bullish, but not to the point where you must reverse. And you can see less than 10% of stocks are above the Bollinger Bands, hardly any are below. So bullish, but not a signal of any imminent change. The Hindenburg omens, no, we're not going to see them. But what I think is interesting is that the NASDAQ, although the new highs are up, it still has new lows. So the NASDAQ has not totally turned around, while the NYSE has not seen 52-week new lows since the second week of November. And that's clearly a much more bullish approach. And you could see a lot of new highs in the NYSE. Broadening out of the market. More rotation. I thought this was interesting. Typically, I do what's on the left. I look at all stocks in the universe that I might trade. I set them for ERG, and then I look at weekly performance based upon that ERG. For those that are new to my channel, ERG is a combination of EPS rate plus relative strength rate plus group rate. So growth stocks are on the right, stocks that have been out of favor on the left. I saw this, I said, well, that's kind of a weird pattern. So let's run it again. Let's run it on just the S&P 1500. And if you think about the 1500, it's the large cap 500, the mid cap 400, and the small cap 600. And what you see to me is rotation. You can see a lot of stocks in the low ERG had big moves, and stocks in the high ERG were relatively flat. If you look at EPS rank and move, you did better with low earnings, you did better with low relative strength. Group rate didn't seem to matter. So another week of rotation. Know your news and earnings. Monday is a breather, but look at Tuesday. CPIs, look at Wednesday. PPIs, look at Wednesday afternoon. We've got FOMC interest rate decision and a press conference. Thursday, we got jobless claims, retail sales, and more. And Friday we got some capacity in industrial production and manufacturing. So a very busy week of news. Not a busy week of earnings, but as it says here, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. This is not by any means an exhaustive list. This is what's put out by earningswhispers.com. But if you have a stock that has earnings, you need to know about it. And then you have to make the decision. Do you hold it through earnings? Do you take profits and then go back in? That's a decision. But it's bad judgment to not know that your stocks has earnings. Surprises are not good. So modest gains, not a lot of conviction. A week where growth led 0.9%. Lots of cross currents. China credit outlook downgrade. I think that part of why oil was weak in the beginning of the week. October jolts, so low number of job openings. Other economic data fit the soft landing narrative, which is good for earnings, but maybe bad for rate cut expectations. ISM non-manufacturing rose. Weekly jobless claims remain consistent with a robust labor market. November employment report was solid. And the University of Michigan, my alma mater, consumer sentiment was stronger than expected. So there was mixed news there, slowing and growing. We have that Fed meeting coming, and I think you could see some volatility this week. So I'm still positioned long. I may use any rallies early in the week to maybe take a little bit off the table. My guess is we run higher into the new year. However, any appearance of a more hawkish Fed could lead to bearish sentiment as markets seem to have priced in cuts, not further increases. So at that point, just remind you about the Wealth 365, and let's go on to the charts. Perfect. So you probably recognize this as wealth charts, and I like to do my analysis using wealth charts. To me, it's just a fantastic platform that has so much to it. Rob Hoffman and his stable of educators are just great teachers. Let me start off on this for a reason. Here are trend lines on the spider, the Qs, and the diamonds that go all the way back to the pre-2022, early 2022 highs. They also coincided with the summer of 23 highs. And we had some pause here, but we have broken through decisively on the spider, the Qs, and the diamonds. So if you want a reason to be bullish, that's a reason to be bullish. Now, the Russell's not there yet, but the Russell really has moved up. The white line represents October low, June low. The yellow line goes back quite a bit, and really goes back far. So I'm going to leave that one. I think that was the, I'm not going to go there right now. I'd have to go back too far to remember what it was. Here is that same trend line, and we are coming up to it on the IWM. So I think we are in good shape. I think we may see some challenges with the IWM, but it's been the strongest of late. And you would hope that this prior resistance will turn into support if we get any pullback on the spider Qs or diamonds. So I'm cautiously optimistic. Along with that, my weekly market timing, which requires price to be above the 30-period WMA, and my trending indicator, the bongo, on the weekly to be green. All of the major indices, including the Russell, are in a buy signal. If we go and we look at the indices, let's just blow this up. Let's take a look at this past week. So we gapped down on Monday after a really strong move on the prior Friday. And really, we didn't do much. If you look at the close of the first bar was 455.61. And by the end of the day on Tuesday, we were at 456.59. So 1 point on the spiders. Tuesday, we gapped up. but boy, was that a little bit of a short-term trap, and we sold off the rest of the day. This is Tuesday into Wednesday, so Wednesday we sold off. Thursday, an opposite day, we gapped up, traded higher, and then Friday we just ran into the finish. So if we look at how we ended the week pretty darn strong, and we ended the week up. If we look at the spider, really what we see here is after several days of consolidation, both before and after this trend line, we had a breakout on Friday and what looks like on decent but not crazy high volume. So gotta like that. And as I already showed you, strong days on the Q, the diamonds, the Russell, it's 7 cents below the anchor VWAP. Be very exciting to see us take that out. We'll be watching that closely. If we look at the VIX, you can see the VIX sold off a lot on Friday, minus 544, but it was only down about 2% on the week as it's really bouncing around this low. And the dollar, which ran up during the week, closed higher again on Friday, but well off its highs and frankly off its lows. So you can see the strength in the market, and we'll have to see what that dollar does. Commodities, gold down, silver down. Oil, hard down on the week, sort of bounced a little bit on Friday. Natural gas, dead to me. And then the other thing that bounced on Friday is the 10-year. Now, I really want to see the 10-year stay below this white line. This white line was prior resistance. This goes back here to October 2022. And those of you that are market followers know that this market really turned around the week before. So the falling rates were great. We had a big run up in the 10-year. We've fallen of late, which has certainly helped the market. Let's see if this doesn't remain resistance once again. If we go and we look at my hourly sectors, this is one thing that I like to do that gives me a sense of what's working in the market now. And by far, probably the best looking thing is technology. Real estate's had a nice run, as has biotech. What's not working right now has been energy, although I wouldn't be surprised to see it start to make a move. Lots of talk about OPEC, Russia cutting, and then you have some South American issues that could precipitate some concerns. Biotech has really been outperforming. It's something we talked about way back here when it broke out about this trend line. And then I go into my scanners to get a sense of what's going on in the market. So we didn't see a huge percentage move on Friday, but what you saw, we did, let me say it again, we had a nice finish to the week on Friday, and what you can see here is we had really strong showing in the market, especially around big cap tech. The spider was up about 0.4%. If we look at Wealth Scanner to get a sense of what's working in this market, it's really showing broadening out. There was a time that all we saw here was technology and communications. Home builders. I think with people afraid to sell their houses because they don't want to give up their low interest mortgages, the home builders have been forced to build and sell more despite the high rates because people can't buy old houses anymore. So home builders are doing well. Regional banks, go back about 2 weeks. On Thursday we talked about this. Saw a nice breakout this past week or two on regional banks. Capital markets, things like KKR had a nice move. Global Internet of Things, take a look at IoT. XLY discretionary, Russell value, semiconductors XSD, spider dividends, banks. I mean, this is a Russell 2000. For those that think this is just the Magnificent Eight, it's all changed. This is a very broad-based rally where we have technology, banks, home builders, discretionary, Russell value, Russell 2000 ETF, Dow Jones Internet, small cap ETF. This is a big change from what we've been seeing in the past several months. So that's, if you're bullish, to me, that's something to maybe be a little optimistic about. Now, one of the things that's always plagued me is analysis paralysis. Not really paralysis, but too much analysis. And I would spend hours looking at hundreds of charts, and what I was looking for were specific signals. When I've looked at some of the great moves of my day, they've always occurred with certain parameters happening, whether it's a big volume move, whether it's a gap, whether it's a breakout, whether there's momentum. There's often been improvement in relative strength, especially compared to the spider or increase in unbalanced volume. So what I was able to do with Rob Hoffman and Wealth Charts was to hard code in most of my indicators, which you get if you own Wealth Charts, but then create a scanner, which is an add-on, which comes with some extra tools that really has made my life easier. So each weekend I compile a list of lists, and to get on that list you have one of many stocks that made it to either one of my scans or somebody that I follow's great scans. And I take a look at that list and I throw it into one major group. And then I could run my 4 favorite setups. So my favorite setup is pullbacks in an uptrend. And pullbacks in an uptrend require the stocks to have had a run-up, a recent pullback, and then start going higher again. The way I find that pullback is typically, and you didn't see it here, but if we just put up ALX Oncology, you'll see the daily bongo go red while the weekly one is green, and then my signal is when the daily red goes to green. So this is one that's extended, but it's certainly indicative of what we're seeing in healthcare and biotech. And here is a small cap biotech that had pulled back into the 50, and on Thursday it gave a nice signal with a breakout and momentum candle. You could see relative strength and OBV are turning up, and then away she went on Friday with volume, although it's hard to see, and momentum. When I look at the news, somebody raised it to 18. Well, wow, 12 to 18, still another 50%. Don't know anything about this company, even though it's a cancer drug company. So this is a pattern that I like. Arista Networks. I really like this stock, and I like this pattern. Had a big gap up here in the run. You could see the volume that came into it. Went sideways, a little bit of a pullback into the 17, and look what happened on Friday. I moved off of the 17. On volume, breakout momentum coming out of a squeeze, a PSAR reversal. There's that little bump in the daily bongo going to red. Relative strength and OBV are picking up. I like that one. FCX, Freeport McMoran. I don't like the fact that it failed at the 200. We'll see if it can break above the 200. MGM. I saw some interesting things in some of the Vegas stocks. I was surprised to see them sell off because I've got to expect that they're going to have some nice earnings after the F1 race. But MGM, I don't like the fact that it's right below the 200, but this might be one that I might want to watch closely. You had volume, breakout momentum from a squeeze, a PSAR reversal, relative strength and OBV look good. And unlike some ALXO you could see down here, where the high jumps at 100, so it's extended, the MGM is not extended. It's at 19.81. I just keep going down the list. Roblox, don't like the fact that it finished in the lower half. Cassava Sciences, another, I don't know if it's specialty pharma or biotech, but I like the pattern. Traded around the 200, little bit of a pullback action, and then high volume, breakout with momentum, out of a squeeze with relative strength and OBV. And my indicator, when the yellow turns to green, the yellow is the squeeze, and the green is me coming out of the squeeze. So I like that one. And I can just go down the list, and I see several stocks that made it to my buy watch list. ACHC, too much moving around. I didn't really get that excited. ASPN, This one is a runner, and the time to have got interested is probably back here when it took out its moving averages. Maybe another opportunity here. It's starting to run away, and you can see it's extended. So I'm very careful with extended stocks, especially when a market's at risk of a pullback. On the industrial side, Eaton Corporation, run up, sideways move. This is another one of my indicators called the EMS signal. Volume, okay. Breakout momentum from a squeeze with relative strength and OBV positive. So lots of things are moving. I heard people talking about the media stocks this week. Well, one that comes right up on the list here is Gray Television. Now notice the little bit of a pullback here, and then on Friday we took out a bunch of moving averages on good volume, breakout momentum, look at relative strength and OBV. I hate to sound like a broken record, but in a good stock market, we see the same signal over and over again. It's hard to believe that AMD is down here, but that's because it's already broken out. This is still one that I would think is interesting here as an AI play. ESTC was one that broke out last week, and you could see this one looks to me like it might be going higher. And last week I said watch it flag and take the breakout. Well, it might be breaking out here. And then I want to call out CVS Corp. CVS and Walgreens are the dominant drugstores in this country. And you could see both of that. CVS has had a nice breakout here. Coming out of a squeeze, the signal was from here to there. Relative strength and OBV look good. Since it just broke above the 200, I'm going to ignore the high jump signal. Now, we may look at it later, but I just want to call out Walgreens Boots Alliance. Walgreens Boots Alliance would not necessarily make this scan. Well, it might down further low. Let me see what day this was. Yeah, it should be on the scan. But Walgreens, similar pattern, not extended, still below the 200, but if CVS is breaking out, it's hard to believe that Walgreens is not going to follow and look at the relative strength in OBV. So that's my favorite scan, pullbacks and uptrends. Why? Because for the most part, those stocks were not extended. Another scan that I like is called bottom poppers, and these would be things that have been falling that something changed. And one of my favorite stocks for the week comes right up to the top, and that's called Helix Energy Solutions. Notice that the weekly bongos on all of these have been red, and for some for quite some time. Let's take a look at Helix. And Helix has sold off almost down to the 200. The daily bongo just turned green, and look at the unusual volume coming into this stock, breaking above on relative strength and OBV. And I like to add some things sometimes to look at it, and let me just show you, let me add one thing. Add indicators, and let's look for divergence. Which one do I want to use? Notice a divergence in the stock here. So it's got positive divergence, price falling, but with positive divergence. And I like this move, 3 dots, so you have volume, breakout momentum, relative strength, and OBV. I like Helix here, and notice it is above the 200. Lilly, it's hard to look at this and think about a pullback, because this stock has just been great. Let me turn off that divergence thing so it doesn't confuse people. But Lilly has pulled back into the 50, and we used to have a name for stocks pulling into the 50, and we called that free parking. And the reason we called it free parking, sorry, drive, I had to take a quick drink, is because great stocks like to pull into this yellow 50-day moving average and bounce. And this thing has bounced off the 50 many times. And here it is sitting on the 50 Friday with a breakout and a momentum signal and about to go positive on relative strength. Another one I like is what I call rockets. And these are going to be stocks that have been big leaders. Paramount Global is another of these media stocks, and there's one here being talked about, acquisition candidates. Certainly doesn't look like a rocket by any means, but if you're $10 and change here and you're $16 and change there, and you've got about 6 weeks to do a 60% move, that's a rocket. There's your ALXO, and there's your Arista network. Again, these are going to be more likely to be extended because they've been running a while. Roblox, here's that Saba. So all of these have had a recent big move, and Affirm is interesting, and I would have thought that this red candle would have been the end of this run. It continues to want to go higher, and I know that one of my medical directors, Simon, took some profits, which I think is the right thing to do, and he's lucky it'll keep going higher, and maybe it'll pay for his wedding, which I know would make him happy. So this is a great leader, and this is one that had a breakout on high volume from a cup and handle breakout and just continues to go higher. And from this point here to where it's at is a 50% move. That's had a huge move. That is a true rocket. In the media space, although this looks kind of lumpy and bumpy, Lionsgate has gone from 7 to 10, so nearly a 30% move or more in a short period of time, consistent with the other stocks in the media category. And then lastly, I call it Momo Up, and Momo Up is going to just show me stocks that have positive momentum. Allegion is another one that had some divergence, but look at the volume, breakout momentum, relative strength in OBV. Carr had sold off part of their company. MBI was interesting. Imagine if you were lucky enough to be owning this stock on Thursday. And to be honest, I don't understand this, but on Friday morning before the market opened, the stock was trading at less than $8. They announced that they were having a $8 special dividend. I'm still trying to figure out how you pay a dividend more than the stock price, but pretty good if you had it. I don't know what I would do with it today. I'd kind of be afraid of it. There's your Paramount, your Alxo. Amplitude is another stock that's got a nice pattern here. Sort of a cup, handle, breakout, not that dissimilar from Affirm on good volume, breakout momentum. Look at relative strength in OBV. Don't you love bull markets, or at least markets that feel like a bull with a lot of positive things going on? And all Momo Up requires is dots. It doesn't. We don't really care about anything else. So there are some real good things there. Now, if I wanted to look for bearish stocks, there are some bearish stocks out there, but not as many as there have been in the past. Let's see if he's got more than one dot. I don't even know what Johnson Outdoors does. You can see a big gap down here, but the same thing works. This is finding stocks that have been in an uptrend or downtrend, retracement, and breakdown. Restoration Hardware, downtrend, big retracement, failure, breakdown. Unfortunately, a lot of these have already gone too far. This is one that perhaps still is, it's already dropped quite a bit, retraced. It looks like it's going to go down again. So I have scans for bullish, I've got scans for bearish, and if you come to Wealth 360, I will be offering my scanner for sale. If you already have wealth charts and you can't make it, just drop me an email at htsidoc@gmail.com, and I'll see if I can't hook you up. It's a one-time purchase, and you get it for life. CEIX is one that I've been in and out of. I'm currently out of. This has been a great move of a coal play, but it looks like it's right now it's weak. We'll have to see where it goes. So lastly, I do put a group together, and I'm just curious. Let's pull this one up. It's a group of high relative strength stocks, leaders perhaps, and wouldn't expect anything really bad on it. Let's just look for Momo Up, and let's see who's got the most dots. Car carrier, they sold off a unit. I'm not sure what that does tomorrow or Monday, but it was good for it on Friday. There's a firm, Aspen, Axos Financials. Boy, this thing's extended. Probably wouldn't plan look at it. Equifax, extended. But there are many different things. These are all stocks with high relative strength. I really like this setup on AVGO, Broadcom. Pull back into the 50. It looks like it's ready to run. Might have to wait till it clears that 17. So something for everyone. Again, thanks for participating. If you're new, hit the subscribe. This is typically what I do. Once on the weekends, I will go out and I will take a look at the market and give you my thoughts. And then if you like this, there is another site I just want to call out to you. It's called stocksanddocs.com. Simple, simple, simple. And on stocksanddocs.com, I will put out videos, not every day. I don't have time every day, but I try and give you sort of a 5 minutes of my thoughts. Basically take what I just did over the last 40 minutes or so, and I do it very quickly in 5 minutes. And if you sign up here, I don't even get your name. It stays with the company that puts this up for me, but it'll give you notice when I place these. So have an awesome, awesome rest of the weekend, and we'll see you during the week, and hopefully at Well 365. Thank you.